Okay, it's recording now. So, like I said last week, obviously, looking at price now, on Sunday last week was a bearish dollar. When we have a bearish dollar, we expect bullish foreign currency. So, what I like to do personally is ask myself, why did we have a bearish dollar? Okay. And when I say why, what do I mean by why did we have a bearish dollar? I'm not talking about no news events, no numbers, economic numbers, nothing like that. I'm strictly talking about the price action, aka the PD arrays. So, what PD array was used to give us this bearish dollar? So that's what I like to ask myself. Okay, and remember, that's like a train of thought I have if I woke up at 8 o'clock in the morning for the New York session and I look back at London. I ask myself the same thing in my head. Why is price doing this? You always look as you're looking at the left side of your chart. Why did this happen? And when I say why, I'm talking PD arrays only. So we have a bearish candle here. You guys know I love my breakers, okay? So we have a really thick body bearish candle right here. 3 candles later, we have the pop higher, and it's not just an ordinary rally higher like all of these candles right here, how we're gradually moving higher. This is a very aggressive rally higher. So they did this for a reason. And then you look left, and the reason is to take out the highs here. Take out the highs here. So if you guys been keeping up with me, and you guys know how I talk about price in these charts, you know I'm referring to this candle as a breaker. Okay. When price is moving lower, they're buying because it's getting cheaper. We know they bought because the explosion higher 3 candles later, and they took out buy side liquidity. If you look at this high and you look left, there's always going to be a blueprint. Why did they have to come up here? Well, yes, they took out buy side liquidity, which is one of the most important things. Look left, volume imbalance right here. There's no bodies inside here. It's just wicks. Yeah, they might have filled it a little bit right here in December of last year, but that's not enough. They needed to really fill it in completely. And they did so here while taking out buy side liquidity. So then when we trade lower, now we look left. So what made them go higher? So we look for the breaker, and it's going to be this candle here. So let's extend that out in time. When I do my breakers personally, I go wick to body, and I'll extend that out in time. For this example, see, I like using this wick to body. I'm going to give y'all this example as well, even though price did come up higher than that. Okay. But I do want you guys to note this. This is something cool. So we're going to take the body of that breaker. I'm just going to put a horizontal line on it. Notice how there was no closures above the close of the breaker. Okay. It's very important. They were just stabbing wicks up there. Very sensitive level. So when you're identifying these levels, what I like to do is I look at it on literally every time frame, okay? Just to see what makes sense, see what looks good. So here's the weekly chart. So we had a daily breaker inside of this blue zone. If you look left, we have a bullish candle prior to a down move. That could be looked at as a bearish order block, okay? Also, hold on. Our PD array matrix. This is all part of the PD array matrix course as well. Swing high down to swing low. We're back into a premium. So when it comes to trending markets and looking for, retracements and stuff like that, you're always waiting for. If you want to sell, so dollar has been bearish for a long time now, right? overall. So if we want to get in sync, and this is a higher time frame, by the way, guys. So if we want to get in sync, we have to wait for them to come up to premium, which is anything above 50%. So when they do that, and here's the dealing range. Someone asked about that at the very beginning of this video. They said, can you explain a dealing range? Well, here is the dollar dealing range on this higher time frame. It's just from the lows to the highs. And we've been trading sideways for many weeks inside of that dealing range. Okay. They've engineered liquidity down here at the lows before they attack that liquidity. If and when they do, they got to come back up to a premium first, which is anything above 50%. So yes, anything above right here is a premium. So therefore, we go and we identify the PD array. Here's the PD array right here, daily breaker. And then now we're seeing a decline on dollar. So now that we have that figured out, so they respected a premium higher time frame PD array. Okay, they respected it, and they are declining. Where are they going to go next? Okay, now we're coming down to the discount side of that dealing range. So you want to look for any PD array that would make sense. PD arrays and or liquidity. Liquidity is a PD array. Just saying, but if you want to get technical. But the first thing that draws my attention, or obviously, first things first, we have the relative equal lows down here. Okay. But for this new week, I want to target this level right here. Daily, the daily chart, daily fair value gap. Notice they stopped just shy of that last week. Okay. They're saving it for the new week. So here's a daily chart. We have all this in mind. We're coming up into this new week and we want to get in sync with the market. How can we do that? Okay. So you're going to look at all your time frames and you're going to find a PD array, which obviously we want, power of 3. We want them to come up first a little bit. Okay. That's just typical. First things first, here's a giant sell side imbalance they had, which they created on Thursday of last week. What I like to do. So was this Thursday? Yes. Okay. So now we have that daily breaker respecting price. And here's that zone. Okay. Oh, I could talk about price forever. Damn it, guys. Let's go ahead and talk about this. It's too good not to. So we were inside of that daily breaker. This is from a long time ago, a couple weeks back, at the end of May. But this was a juicy setup I called out on dollar and cable. I just got to share it. So this blue zone is that daily breaker, wick to body. Okay. Market had stabbed up. Okay. Then they traded lower. And then here's that daily zone. Now look up. We had this beautiful sell side imbalance. Also with this OTE. So premium. Here's PD array matrix. This is what I mean by fractals. So the blue zone is at higher time frame resistance level. And I just explained why. Now you sit on your hands and you wait for them to engineer this setup. When I say engineer, I mean engineer liquidity. So here's lows down here, equal lows. You wait for them to engineer that, and they did. And then you wait for them to engineer some sort of imbalance in the market, kind of like this right here. And it's an OTE, hourly premium. They fill the sell side imbalance, and then they tank lower for those equal lows. I want you to remember this happened inside of that higher time frame daily breaker. That's the beautiful part of it. And then look how they use that level to go lower. So when price was trading right in here on in the last couple weeks of June, we're inside that zone. You look left and you see them respect this sell side imbalance, this SIBI right here, and go lower. So when we're trading all up in here, you're looking left and you're telling yourself there's no reason. If we are bearish and price is going to go lower, there is no reason for them to trade above this daily high. Why? Because it filled and respected lower. And then we took out these equal relative lows. That's beautiful price delivery right here. And I remember this trade, and you can match it with cable. We're going to talk about dollar again, the current dollar. But this was too good not to share. So watch this. So here was that setup I just outlined on dollar. Okay. And it was on Thursday, June 1st. Okay. Keep in mind everything I just explained right here. Now watch this. What did I say, guys? Thursday, June what? June 1st? Is that what I said? God dang it. My memory is fucked. Yeah. June 1st, Thursday. June 1st, Thursday. Okay. So you blend that with, I'm sure you guys already see it. Type yes if you see it before I show it. Yep, you guys see it. I know you should see it. If you follow me, you know what I'm going to say. So we're blending that dollar analysis at that daily breaker, the high. And this was a beautiful setup to blend it with on cable. Discount, PDRA matrix, fill in the buy side imbalance with the order block. They don't have to come to the order block when they have it blended with a buy side imbalance. You just want to get in there as they're filling this buy side imbalance. And note the time of day. This is always critical. It's London Open. That's when you're expecting a setup to get respected and form and fill. So when they trade aggressively down, that's manipulation. You always expect manipulation. So these are my favorite type of trading days, guys. This is the type of setup where I would go high risk and I would trust it because we have time on our side. And then we see that aggressive drop, which is manipulation, and we tell ourselves it's manipulation. Why? Because we're expecting it to fill in this buy side imbalance. And it's 3:00 in the morning. That's the heart of London Open. It's our kill zone. So we'd comfortably be buying this. Stops would go below the order block here. Boom. So we blend that with the dollar setup. Most importantly, they engineered all of these highs over here. See all these highs right here? Fill in the BISI, boom. Takes out liquidity quick. That was beautiful price delivery. So I like to blend my setups with the dollar index. That's the only way to do it, guys, for high probability setups. And when people are trading on the M1 chart, it's kind of hard to do that. Don't you agree? I do. So that's why I don't give lots of signals, but I prefer quality over quantity. But I will say here lately, my signal game has been, I'd give myself a C on a Richter scale. You know, like you got A plus setups. Like in school, you got an A, B, C, or you got an F for fail, or a D, which is really bad. I'd give myself a C, and that's being nice. That's giving myself some credit. And I'm giving myself a C based on my signal performance here lately. And that's me being honest with y'all. So y'all should appreciate that. But I'm going to really pick up on things. I promise. I've been sick. I've been fucking stressed, the whole 9 yards. But no excuse. We got to get back in this shit, guys. We got to start nailing them again. So I'm going to show up and we're going to show out. Anyways, beautiful price delivery. Beautiful, beautiful. So for the current dollar, like I said, if we have this target in mind for near term, yes, relative equal lows could be a target. But near term, for the beginning of this coming week, we want to be attacking this for value gap. Okay. I believe Euro already had traded to it. And yes, they did. It's right here. No, that does not mean there's SMT. This is not SMT. That just means euro strong. If you go to euro pound, it's probably bullish. I would assume. I could be wrong. I finally quit comparing EG in my analysis. I just too much confusion for me. Notice there's not a really clean breaker on euro like there was dollar. That was a form of SMT. So if you want to talk about SMT, remember the dollar breaker here? Look. And then we took out all the highs and confirmed the breaker once we traded lower. Here's our breaker, this candle right here. If you go over to euro, I believe yeah, see, this is real true SMT, all right? And then this was the same time that dollar made the breaker and took out lows. Look, euro fails to make that lower low, while dollar made that higher high. That's how you can assume there is manipulation going on dollar, and dollar should be trading lower once it took out those highs, because euro could not trade lower and make that lower low, while dollar made the higher high. So you're telling yourself, yep, that's manipulation. I'm shorting dollar. I'm buying foreign currency. But I'll be 100% transparent with you guys and honest. When this was happening, I remember, but guess what? I wasn't able to highlight this and call this out in real time. I wasn't able to do it. I didn't do it. And that's just me being honest. But still, great learning experience. I did call out the SMT. I did see the SMT, but that dollar breaker, that's hindsight for me. Anyway, so if we want dollar to come down lower, what are we going to do? We need to go into the market and we need to identify a level that could potentially find a weekly high on dollar to seek this level down here. So I'm not saying this is going to happen, but this is my mindset, how I would do that. Okay. So if last Thursday we had this really, really clean setup, again, I want to shoot myself in the fucking forehead for not taking this trade. I wasn't in front of the charts. I was sick as fuck, sleeping in like a bum. I didn't show up for work. Yep, I should be fired. That's why I'm being nice when I give myself a C on performance. But swing high here, down to swing low, New York kill zone, 7, 8 o'clock in the morning. Fair value gap, order block, trading lower. Beautiful fucking price delivery. And I fucking wasn't there to call it out to my private group as a signal. And I fucking hate myself. I'm really hard on myself when it comes to this, because I would take this all day, every day, because we were expecting a bearish dollar anyways. OTE, premium, fair value gap, order block. If you go over to euro, same thing. Beautiful. Swing low, swing high, OTE, New York kill zone, 8 o'clock in the morning, look left, fair value gap, order block, blast higher. Fucking beautiful. And it makes me so mad, just because, like, I'm not mad that I didn't make money. I'm just mad that I didn't show up. I'm mad at myself for not showing up and giving this to y'all. So I'm asking for forgiveness, because if I would have been in front of the charts, shoulda, coulda, woulda. Yeah, I know, but we would have smashed that. What is this higher level that I got noted? What did I note up there? Oh, that's the fair value gap. Okay. So again, for like the 5th time, we're going to talk about the current dollar state. So your mindset's telling you, so the setups I just highlighted right here on Thursday for dollar and euro, my mindset when I come into this new week is there's no reason, if we are going to be bearish, there is no reason for the dollar index to trade above this swing high. Why? Because we look left and we see a past setup that got respected and traded. So hindsight can be good. I love hindsight, because you need hindsight to go foresight. So you're telling yourself that price had respected this beautiful setup using our PD arrays. So there's no reason, if we are bearish, there's no reason to trade back up here. So where's the next PD array, guys? Right away, I would assume here's a no wick candle. It's one of my favorites with the sell side imbalance right here. So I would assume this should be the weekly high for this coming new week. If they want to be generous and be nice to us, I would want the market to stab up here. I don't want them to do it early though. I need them to do it in a kill zone. I need them to move sideways. And then around 2 o'clock in the morning, I'd like to see a quick pop higher, real aggressive, real sharp, real fast around 1:30, 2 a.m. That's how you know it's manipulation, when they do it real quick around that time and you have your PD array above the marketplace. That's how you know it's manipulation, and you should not be getting scared, or you should not chase that. You should do the opposite. So I'm interested in this level here. Big old sell side imbalance. And you guys are watching me look at this same level, and I'm just skimming through the time frames to see if there's any other confluence that would make this worth a while. There is 3 up close candles, actually 4. So if we go to an 8-hour chart, I bet this would be a bearish order block. Actually, not an 8-hour chart, it'd be 4, 8, 12. If they had a 16-hour chart, because each one of these candles is 4 hours, so 4, 8, 12, 16. This would be a bearish 16-hour order block. So we have the bullish candles, then we have the aggressive run lower. So all these up close candles can be looked at as a potential order block, only because we're blending it with the sell side imbalance. So all in all, if we're going to go lower on dollar, we need them to fill this imbalance and go lower, because above there's no reason, there's nothing else they need to trade to go lower. If we break above that imbalance, then it's very likely they're going to want to trade above, these daily highs up in here, Thursday, Wednesday. So note that as well. And you can look at this order flow. Okay, remember the blue zone is our daily breaker. And then once we finally broke lower, took out this low, we created a sell side imbalance here. And you want to tell yourself what happened. The market rallied up, filled in this sell side imbalance here, and then traded lower. So it's respecting bearish order flow. Okay, that's something I stress the importance of that a lot when I teach. What's being respected, guys? I like this area right in here, this specific one. They could go a little higher and come up to this order block here, 15-minute up close candle prior to this down move. They could go up there, but we'll have to see. Look at the chat. The wick of what order block, Lucas? Another thing. So if we still have 2 weeks left in this monthly candle. Okay, guys? So I'll open up that monthly chart. We're going to close all these drawings. Okay. So obviously it looks like we've filled this volume imbalance on the monthly, and then now we're going lower. So this is a monthly dealing range here, lower to high. We're trading inside of this dealing range. Okay. If I was bullish, I would want them to eventually come up here, but I believe that's a potential breakaway gap due to the fact of that daily breaker, and we're respecting it. We're going lower. So we have 2 weeks left before this candle right here closes. And the fact that we're respecting our bearish PD arrays, I would assume we could potentially get this specific candle right here. If we're really bearish, if we're gonna attack sell side liquidity, you're gonna see this candle trade below previous month low. So these are other things I tell myself, okay, guys? And if this was a 5-minute chart, guess what? What would that confirm? If we trade below this bullish candle and close like this, what would that confirm? Someone say it. I'm testing y'all. This is a pop quiz. If this current monthly trades and closes below previous month low like this, what does that tell you? Bearish order block. There you go. Good job, Diamond. Good job, Mode. Lucas. So yes, then we'd be really bearish for the rest of the year. Where could we potentially go? My eyes go down here. This little fair value gap. This candle's high, this candle's low, no wick. Take out sell side liquidity here, go lower. But that's predicting, weeks down the road. We're not really that focused, if price is going to go down here or not. That's a long ways away. We want to participate in the current weekly candle. We have the relative equal lows here. That gives us, an advantage on that monthly close, getting it to trade below and close. I know Romeo said something about this. He's concerned of this bearish candle, then the bullish candle. He thinks, don't quote me, but he said something about this being a bullish order block and price closing higher or with a wick, which would be awesome too, because if that were to happen, if this monthly respects this bearish candle and we start seeing higher prices, my eyes then will go to this level up here. And if we don't, then this is just a breakaway gap. Well, Lucas, when it comes to a monthly standpoint, yes, because we don't know for a fact anything. But I'm not leaning towards this as a bullish order block. I see these equal body candles. The market likes to trade towards that. And then, like I said, we have that daily order flow. Everything's respecting bearishness right now. But if we did respect that, and then this monthly starts to trade up higher when it closes with the wick, as if it was going to respect that monthly bullish order block, we would then change our direction, change our mindset, and we would go higher just for the fact that we have monthly highs and then this fair value gap. That's speaking on higher time frames. We're not too worried about that. First things first, we want to target this fair value gap down here. That's what I want to do, okay? Agam, I don't have too much concern about price closing below swing highs and lows. I strictly just trade the PD Ray matrix, which is order blocks, fair value gaps, buy side imbalances, sell side imbalances, breakers, stuff like that. I use swing highs and swing lows as liquidity. I'm not really a market structure break kind of guy. Yeah, Lucas, exactly. But like I said, first things first, I want to see if we can respect this sell side imbalance and go lower for this coming week. So let's talk about cable real quick. I know my laptop's dying on me. Of course it is. So predicting that monthly candle on dollar, I want to show y'all I did the same exact thing for cable. Okay. As you guys know, I called cable down here all the way to up here. Fucking 1,000 pips. I called all of it. When we were trading down here, I said we're gonna go up here. And look where we're at, guys. So we have this down close in a bullish market. What do we expect to happen after a bearish down close candle? You guys remember when I was teaching this price swing? I taught it a bunch. Remember this breaker here, up close candle, down move, takes out liquidity here. When we trade higher, we confirm the breaker right here, which is this up close candle. And you see the respect right here. And then we went to bullish order flow to attack these highs up here. And then I was teaching you guys to look at all the down close candles, what happens after a down close candle when we're in a bullish order flow standpoint. We have a bullish move, down close candles, bullish move, down close candle, bullish move, down close candle here, bullish pop, here, bullish pop. So, and then last week, another setup I didn't take last week, down close candle here. What happens after that? And that was Monday. So Monday, weekly low, manipulation lower, get everyone thinking the market's going to go lower. But if we're in an uptrend, which we expect to happen after a down close candle, engulfing larger up close candle, close above the bearish candle, what does that do? That confirms a bullish order block. That confirms bullish order flow. So as soon as that bullish candle closed, I did call this out. I said they're going to use this candle here as support to go higher, to attack the highs to the left. So when you have that in mind, okay, this is what I mean by fractals. When you have that in mind, same thing I'm showing you right here, down close candle, and we're in bullish order flow, so we're expecting the next day to trade higher. You can sit on your hands and wait for that to happen, then engage, because once they close above that bearish candle, that confirms the bullish order block. So when you go to that monthly chart, we're in bullish order flow that I stated all the reasons in plenty of videos, plenty of webinars. I stated why we're bullish when we were down here, that daily breaker and everything else going higher. Down close candle here, bullish pop. This candle here respects this down close candle. Then we have this down close candle. But note, we have not filled in the SIBI up here yet. So we have a down close candle, and we still have room to go higher. Dollar's bearish. Remember the daily breaker. Remember everything I talked about on dollar. Dollar's bearish. So we're expecting cable to go higher. We're blending the dollar bearishness. You want to go to a foreign currency, and you want to look for those higher time frame PD arrays to be targeted on the opposing side. So we're blending everything together, guys. It's beautiful artwork. But we have the down close candle, and then this new month opens, okay? And you would expect it, because we're bullish, so we'd expect a close above the bearish candle. We'd expect it to be a bullish candle, because after bearish candles in a bullish flowing market, we expect a bullish candle. And that's what you see here. So that's just the train of thought I have when I'm diving into these markets. And I'll show you again. It's like the same thing for here. Bearish candle, we're in a bullish market, so I expect them to go higher. Liquidity is a PD array. Real quick, I need to, I'm outside of my porch. I need to go inside and plug up my laptop, because we're not done yet. I'm going to talk about a couple other things. Hold on. All right, guys. I got my laptop plugged in. Call me Eddie. How do you mean this liquidity is PD array? So in terms of our PD array matrix, Eddie, old highs and old lows is on our PD array matrix scale. Okay. Old highs and old lows is what? Liquidity. That's what I mean by liquidity is a PD array. Because if you go look at your PD array matrix from ICT that he created, you're going to see in the discount side of it and the premium side of it, you're going to see where he has old highs and old lows. That's liquidity. So yes, liquidity is a PD array. People just like to overcomplicate things to make themselves sound more intelligent. and to get people to have interest in them. Yeah. Light bulb. That's all it is. Just liquidity. But so yeah, that's something I really wanted to stress on you guys. Like, it's a train of thought. It's a thought process. It's not really how much this trader might know on Twitter. And let's just say anyone with, 10K plus followers, they're out to be the smartest guy in the world, the best trader ever. It's because they're more knowledgeable. They've watched more education. They have more experience. And that's all irrelevant when it comes to trading. Well, I mean, of course, it's important to have all that, but it's the way you think about this and the way you tell yourself what's happening, aka it's the train of thought process, how you implement all this stuff and structure it in your brain. And I believe I just disclosed a lot of that with you. But when you're in my private group and we start having these every single Sunday and we talk like this, it's going to start engraving in your brain, and you're eventually, like always states, you're going to have that aha moment and everything's going to start clicking because you're watching me do this and talk about it this same. I don't ever change the way I mark price. Literally, I do it the same exact way and say the same things every single time, but it's always just a little bit different for every different example. But it all will eventually click if it hasn't already. So we're bearish dollar. We can do one more example, I guess. Let's look at UCAD. That's a pair I looked at last week. And again, I want to shoot myself in the fucking head for not taking advantage of last week's price action. It just, I don't know what's wrong with me. It's just very, very aggravating. Okay, guys, when you don't take advantage of really good price action. Okay, so PD arrays. Here's your answer, bud. Liquidity is a PD array. Real quick, watch this. We're gonna hit that replay button, and here's a test for y'all. Okay, so get ready to answer this. Okay, we have UCAD. Remember, why is the dollar index bearish? Why was it bearish last week? We already went over that. I just want y'all to remember we are bearish dollar index, and I already explained why we're bearish dollar index. Okay, I already showed y'all why. Therefore, USD CAD should be bearish as well because the first currency is USD. So right on the daily chart, I don't even have to look at any other time frame. I can just look at the daily and tell this fucker's going lower, especially with the dollar index going low. So this is last Tuesday. We close right here, and we have all this other. We ticked below these two lows, but mind you, we have yet taken out these two lows. We have yet taken out the low down here. So that's a PD array, okay? Old lows. And mind you how equal they are and pretty and clean. What am I going to say, guys? We just talked about it with cable and on the monthly and daily chart. What am I going to say? Tuesday closed like this. If I am bearish and I want to target those lows, what am I going to say to myself? Good job, Lucas. Good job. You're always participating. That's how you learn, buddy. That's how you learn. So you go into Wednesday. Okay, we're bearish dollar. UCAD has all this liquidity down low. We're bearish dollar. And we closed below Monday's low. Monday closed bullish. And remember on cable, Monday closed bearish. So that's manipulation on Monday, clear manipulation. I think one thing that messed me up, yeah. So I'm not going to beat myself up too much of all this beautiful price action that I missed last week because Tuesday was CPI. And I've been burnt by CPI. You don't know if it's going to just open and go and just blow up. Sometimes I've seen CPI do that. and then it won't stop you out. It'll just go, it'll skip your stop loss by 100 pips, and then you're screwed. I've seen CPI do that, and that was Tuesday. This week it didn't do that. But so Tuesday was CPI and Wednesday was FOMC. So that had a pretty big factor on why I wasn't too comfortable taking trades last week. But anyways, yes, you're right, Lucas. So Tuesday we closed below the bullish candle. So going into that very next day, we would, I would draw my zone, wick to body, and I would want the next day to open and respect that and go lower. And stops would be at the high of the bullish candle. Hit play. And there you have it. Yes, this is hindsight right now using the replay button, but that's okay. That's how you learn. But a lot of people see me call this in advance before for many, long time. Okay. And this is the same concept that I've been trying to teach you guys. Anyways, open high, and then we target what? The liquidity lower. And then we're also bearish dollar. So it all makes sense. Beautiful price delivery on UCAD as well. So if dollar is going to continue to go lower for this coming week, all right, guys, here's a moment. If we're going to continue to go lower on dollar, and if we're going to continue to go lower on CAD, what should not happen? Well, they respected this order block here last Thursday and Wednesday, okay? So if this pair is going to go any lower, there is absolutely no reason to trade back up into here. Okay? And with that being said, I would then go into the market and I would look for another PD array. And it's right here. Up close candle, down move. Friday did not rebalance all of that. They purposely left this area right here open, I feel like. I don't trade this pair much, but this is a potential setup. So we have a fair value gap here on the daily chart. We have a bullish candle, down move. We have the respect of this order block going lower. The only thing we're missing is liquidity, because we already taken out all the lows, and that's a PD array. But if we done that, and if this thing's going to go lower, let's find the next PD array matrix. Well, looking down even lower, look at this. Big old buy side imbalance. So this could be a potential area for UCAD to want to fill. Let me scoot it up a little bit. So dollar is going to attack that. If dollar is going to want to come down to this fair value gap minimum and maybe even lower, keep in mind it could come down for the lows. But if dollar is going to come down minimum down here, and then keep in mind the setup we'd want to happen, this SIBI, so we'd want dollar to open and then rally higher first, find the weekly high, then go lower down to that daily fair value gap. Then UCAD, we'd want to open just like dollar, pop up higher just like dollar on that hourly chart, the hourly sell side imbalance I just showed you. We'd want UCAD to do the same thing. And it would make sense because UCAD has this daily fair value gap with the daily order block right here. So I would want UCAD to open and pop up higher into here, then continue lower. So I would want this to be the weekly high on UCAD if we're bearish, which I think there's a good chance we may be bearish. Where can we go? All the way down to this buy side imbalance. And then remember, when I'm looking at these levels, I like to see what is this buy side imbalance on a higher time frame. I don't know the answer to that, so I'm going to go look. Not just this example. I do that for all of my levels. If I have a level, I like to see what is that level on a different time frame just to see if it looks good. Same thing for this. So if I'm predicting, let's just say I'm predicting the weekly high to be right here because of XYZ, aka because of what I just talked about on dollar and then also the fair value gap here. So if I'm expecting the weekly high to be here on UCAD, I always will zoom out and go to that weekly chart and just envision it. I will go to the weekly chart and I will look at the level I'm wanting and just see if it even looks realistic or not. I'll ask myself. And for this case, it does. So those two lines is that daily fair value gap. I'll go to this other chart and I will look at that level and does that make sense? I'll ask myself that. Does that look realistic? Does that look like it could actually happen? And in my opinion, it does. I mean, look, we have 3 bearish weeks. We have that daily BISI down here. That daily BISI on a weekly chart. We have a weekly down close candle prior to this huge rally higher. So this is a order block. The sensitive level on an order block is going to be the open. So that daily BISI blends with the open of this candle here, of the order block. This candle right here. So the open is a very sensitive level. So when it comes to order blocks, yes, we use them for entries, but we also can use them for targets and exits. So this weekly open of the order block is the same level as the daily imbalance. So the daily imbalance is this one single candle, how it goes up, and then the next candle does not rebalance it by coming lower. They left it unfilled for a later time. So that is a buy side imbalance. This candle creates a buy side imbalance. And it's a weekly order block as well. And that's a zone I'd like to target if this thing's going to go lower. So it does look pretty good. And then, like I said, we had 3 bearish weeks already. So it is realistic where maybe we could do that. Power of 3, open, high, low, close. So for UCAD, I mean, a power of 3 right here it looks pretty decent, guys. Open, high, fill that level in the daily chart, and then start trading lower while dollar does what I said I want it to do. If price were to trade through the fair value gap, that would invalidate our bearish order flow. No, if price trades through these highs right here, that invalidates bearish order flow. Then we could probably come up into here. The fair value gap is like we're blending it with the order block, so it can trade up above this top line. Why? Because it would be stabbing into this order block, wick to body. And that's okay. We can allow that to happen. I'm not saying they're going to go way up there, but we can allow that. We want them to just stab up inside the fair value gap, then go lower. What would invalidate it is if they trade above last Thursday and Wednesday's highs because of the respect of this order block here. See that? The wicks look left, respect order block, trade lower. So as far as RR, I don't know. Let's slap a tool on there and go short. Let's say you want to take your short at equilibrium of the fair value gap. Stop loss would go here. I know I just talked about it above here, but in the form of a stop loss, I'd want it here. We don't want it to go to these bodies, okay? But we would allow it to trade, up into the wick. So in the form of RR, hold on. And then we'd want it to go down to minimum the open of that order block. But odds are it could come all the way down to here. But it's just, and it's framed on the daily chart. Okay. And you can reduce that. You guys know price is fractal. You can get in there on a 5-minute chart during the kill zone intraday and snipe a different setup if you're equipped with that. But that's just a standard. That's a standard trade. You know, what's the R on that? Almost 2R. That's standard. And that's on a daily chart. And like I said, you could probably end up finding, you know, if you wait for a kill zone and you're on that 15-minute time frame during a kill zone or 5-minute, you could probably reduce the risk. But if you can't trade intraday and you are equipped with patience, which I am not, and you just want to trade this daily chart, then yeah, Lucas, that's what I just said. It is possible, but it's not possible to do right now unless there was something showing. So if there's nothing showing yet on those lower time frames to the left, then there's simply nothing you can do. You'd want them to come up and then look at last Friday's highs. Look how equal they are. It's low resistance liquidity run trend line. They're gonna pop above that for sure. But you want them to come up there first, then create something like displacement on those lower time frames during a kill zone. Then you see the displacement, and then you would enter on a pullback. And when I say displacement, what does that really mean? It's a move, this is displacement right here. That's displacement. And a lot of times displacement creates what? It creates an imbalance. So then you would get your entry on an immediate rebalance of that displacement, then continue lower. So if let's just say Monday came, right? And this is all hypothetical, okay? I'm not saying this is what's going to happen, but let's say Monday came, all right? Prices ranging. Then the closer we get to London Open, they're starting to come up, and they pop up real quick, all right? Hanging out for 5, 10, 15, 30 minutes, and then they displace lower, okay? And they start trading lower. That tells you that the high of the day should be in. So then you can reduce your risk by doing that. That's how you can refine your risk. Then that 2R daily chart trade I just looked at with y'all would then turn into, 5, 6R. Because you would assume that the daily high is in because we're in a kill zone and they displaced lower. We're going to enter our short once they pull back at a fair value gap, order block on a 5-minute chart, whatever it may be. But you're telling yourself the daily high is in, and that's how you could fix your RR to get the maximum reward. Also, real quick, this is something new to me. I just now saw it. This blue zone is that daily order block, guys. Remember? Watch. This is how you blend PD arrays together. So we have that daily order block right here. That's what this blue zone is showing. If you look at that on a lower time frame, we have down close candles. No, nope, not right there. It's right here. We have 4 down close candles right here. Back to back to back consecutive down close candles. What happens after these 4 down close candles? What do? They then print a shitload of bullish candles on Monday of last week, or the week before that, I believe. Sorry. And then they go higher. What do? They take out liquidity. They're running highs. You guys won't be able to catch this as a breaker, but my eyes are trained for it. So I'm just going to call it out. But this is your breaker. All of these candles right here, they combined into one level for me because they're consecutive. Okay. There's no bullish candle between these down closed candles. So this is all one candle for me. 1, 2, 3, 4. Down close candles. Then we have a bullish run higher. Takes out highs. Then on this day, we close below equal lows. And that's what creates the bearish daily order block. This day right here, this day right here with the down close candles and the up close candles, that day creates the daily order block. That's why my arrow is pointing down right here. Hold on. So there's that bullish candle right here. And you can refine that. That again, that is this day right here. Ava, go. Go. So that's a breaker. So it's a daily order block with the breaker. No one else would look at this as a breaker. But I'm a little bit different. Everybody else. And then we go lower. Thanks, Dom. I appreciate that, buddy. Yeah, today's Father's Day. And I don't know if, forgive me for saying this, but I'm just being honest. I don't know if other countries celebrate Father's Day. That may be a dumb thing to say, but I really don't know. You know, does the UK do they celebrate Father's Day? Nigeria, India, Africa, or is that just a United States thing? South Africa, yes. Okay. Well, obviously, happy Father's Day to all the fathers that are in this chat right here. Australia, no. September 4th. Again, happy Father's Day, guys. I was looking at Fred. Father's Day here. Ireland. Damn, Fred. I wish I was in Ireland. China. Damn, we have people from all over. This is so cool. Not in Germany. Nigeria does. Yeah, today's our day. And it's Sunday. Sundays are my favorite day of the week because the market opens and I call it Sunday Fun Day. Sunday is my fun day. So Sunday Fun Day. I typically go over the charts and clean my house. But we're going to be grilling out today. I'm going to cook some steaks and just chillax, clean up a little bit. But so that's about it for this session, guys. Hope you enjoyed it. I will upload it, the recording, so you guys can have it. If you miss something or rewatch it, or I know not everyone shows up, obviously. Hell, there's 100 people in the private group and usually only 10 to 15 people show up. But I do upload the recordings. And anyways, thanks, Fred. What's up, Lucas? What's your question, bud? The price closed halfway through the order block. You got a lot of what if questions, don't you, bud? You're really trying to challenge me, ain't you? So your question is what if price closed halfway through the order block? Which one are you referring to? Oh, that's just a tricky question, Lucas, because I've seen price do that. Like I've seen price, like, let's just take, for example, this candle right here, okay? Hold on. So is this your question? Tell me if this is what you're talking about, okay? So this next daily candle, what were to open, are you asking me what if it did this, and came up and then closed like this? Is that what you're asking me? Yes. Okay. So I mean, that's just like a learning experience you get over time. So it doesn't really reduce, it can reduce the probability because we want these order blocks. If you're trading an order block, or a fair value gap or a breaker, you want it to get respected right away, right? Same for a fair value gap or any form of imbalance. But I'm sure you guys can agree with me on this. I'm sure you've seen that happen and they close like this, and you're like, oh, they closed above 50% of the order block, but that very next day rejects and goes lower, right? I see this probably every week, on the various of time frames. So it's a hard question to answer. That's why we prefer, if the order block has a fair value gap blended with it, the answer is no. It should not close all the way like this. If there's a fair value gap, we want it to really close with a wick, to be honest. But if it's just like this example right here, this bullish candle, then this bearish candle, see how the next day opened and stabbed up into the bear or the bullish candle, the order block, then went lower. But there's not really a fair value gap in here. It's just a down close candle. So that's not really the highest probability order block. But in this example, order flow was really bearish. So yes, they respected the bullish candle and went lower. Those aren't the best order blocks to choose. The odds are they can trade through them, but you want them with fair value gaps. So someone asked about the private group. I believe Q3 will open up towards the middle of this week, towards the end. I'll do my open enrollment for that, and it'll last until all of next week and next weekend. But then that following Monday is when Q3 will be locked in, and I'm going to be strict on the amount of people that can come. And I know, like, my PDRA Matrix course is set 100 people max, and I upped it to 200. But for the private group, the quarterly group, I just want to keep it below 100. So I just feel like 100 is a really good number to work with. Too many. When a group's too big, you can't manage it. Like Romeo, I believe he's about to open a group, and me and him were thinking about collaborating. But then I'm starting to think, like, that dude has all the clout on Twitter right now. Okay. If he opens a group, I just don't think he's going to be able to sustain it, because he's probably going to get 500 to 1,000 people in his group, and Romeo doesn't have the experience for that, guys. I love the kid, but like I said at the beginning, he's a yapper. He's not going to be able to manage all them people. And then he said something about he's going to be gone off social media in December. So why is he going to open up a quarterly group if he's going to be gone off social media in December? Let that marinate. Think about that. And so I'm probably going to have to break it to him, which he won't mind. Me and him are pretty straightforward. Yeah, hit it and quit it, Jerry. That's what I'm saying, And I'm not talking shit about the guy. And like I said, I don't got nothing against him. He's a cool guy, cool cat. He knows what he's talking about for the most part. But granted, he learned a lot from me. Yes, Jerry. I will provide the breaker screenshots before and after. I've collected them. I wish I would have saved them for the past 12 months, but I kind of stopped doing it. But I have about 3 years worth of breakers, and they're beautiful. It's a beautiful collection, but I will provide that. Yeah, Lucas, the Q3 we have a group chat. Then we have my the Signal education channel. And then I try to do these Sunday sessions every week as well. But like I said, in the middle to the end of this week, open enrollment will start, and y'all see my post on Twitter. So if you DM me, don't get upset that I'm not replying because a lot of people have DM'd about it. I'm not replying to anybody. I wait until I start taking people in. Then I'll start messaging people back. Do I trade crypto? I don't trade crypto, but I gave Romeo his bias on Bitcoin. That's another thing. He's his own person. People are their own person, but I feel like I definitely paved the way for a lot of these newer people that are getting all this hype. They've watched my YouTube content. They've learned from me. For those that don't know, hell, I had a free Telegram room back in 2019 and 2020 where all these people that are really popular today, they were all in my free rooms asking me questions. Swear to God. And I used to be petty and I used to brag about it, but then I kind of matured and got humbled and all that. And it's just, it don't matter no more, But like Skittish Currency Merchant, that dude had 100 followers asking me questions, getting guided by my free Telegram room. The ACK dude, what's his name? He has me blocked now, but he's also a mentor now. This guy named Sean. The list goes on and on. Fucking was Stock God's butt buddy. I don't keep up with him no more. What's his name? 21. Yeah, there's DMs of him asking me if I can teach him, help him learn because he's not the best trader. Yada yada yada. Like, then people attack me when they ask for this evidence and they ask for me to provide the proof of my claims, and I show and I prove it, and then people talk shit to me, and I don't like all that. But yes, I definitely paved the way for a lot of people, or I've helped a lot of people progress. But who am I to even brag about that? Because I learned everything from ICT as well. But like I said at the beginning of the video, it's about that train of thought, and it's about, how you process this stuff, how you think about it. But I've disclosed the way I think about it. And then next thing I know, I see other people using my train of thought. But that's okay. That's why I teach it. But give credit where it's due. If I helped you in any way, shape, or form open your eyes and see these charts better, and now you're getting all this hype, show some appreciation, man. And Romeo did that. So I'm grateful for that. And that's why I like Romeo, because he showed his appreciation. But the reason why I had a problem with these other guys is because they learned from me. They learned a lot from me in my free Telegram room because I was on here every day teaching and giving out trades back in the day. And they learned from me, but they acted like they didn't. That's why I let the pot stir. That's why I got upset and, talked my shit about 2 years ago. I received a lot of negative stuff back then, but that's why I exposed them and I talked shit because they didn't show appreciation. I remember when all these guys had like 100 followers. What's that? The ACK Dragon NFT guy. It's like ACK something. AK. I don't know his name, but he promotes that Dragon NFT. That guy too. He has his own mentorship now. Anyways, here's Bitcoin. Same thing for cable. I want to show y'all something. Watch this. Watch. Okay. Watch this. This is where Romeo. I believe Romeo got his bias from. So here's cable. Okay. Monthly chart. Remember when I called this buy side imbalance here? Extended out in time. Talked about this a lot. The bodies of these monthly candles do not close inside of the imbalance. And then we're going from this buy side imbalance discount to where we are now, sell side premium imbalance. Okay, watch this. Then you go over here to Bitcoin, monthly chart. What do you see? What do you see? What do you see? We have why is it being weird? Okay. What has price most recently done? Well, if you look at this month of March, look at the low, okay? Where did the low form? The low form. See, this is what I mean. I don't deviate. Everything's the same for me. Okay, hold on. Yep. So we have fair value gap, order block. These two down close candles prior to this monthly close creates the order block. We also have a fair value gap. created with this candle's high, this candle's low, buy side imbalance. Okay. This candle stabs below that. Look left. Why did we close bullish? Well, you tell yourself why. This is why right here. And then once this month closed right here, you look at the chart and you're like, what most recently happened? And we're in a discount down here, obviously. And if we're going to go from a discount, here's the PD area matrix example. We're at a discount. Now, where should we head? We should be heading to a premium. Is there a PD array at the premium side of the market on this time frame? Yes, there is. Where is it at? It's right here. It's up here. This candle's low. This candle's high. The candle in the middle. That's a fair value gap, sell side imbalance, whatever you want to call it. But we can also blend that with these two monthly up close candles prior to this down move. So when I have this zone, yes, I already see this gap, but I'm going to draw it out like this. This bullish candle, wick to a body, extended out in time, blends with the fair value gap. So same thing with cable. I believe Bitcoin is doing the same thing. It's going to go from the monthly BISI to the monthly premium CIBI fair value gap. What a block. But also zoom in. You got this candle's low. We got this candle's high, extended out in time. Yeah, we started to stab down into there. But guess what? We got 2 weeks left for this candle to close. Guess what? I think it's going to close like this. I think we're going to start seeing it come up. Why? Because we just stabbed into this fair value gap on the monthly. Why should we respect that though, guys? Because we already respected this one down here, so there's no reason to come down here if we are bullish. Therefore, I think we're going to go. So Bitcoin, 35K. Calling it now. And guess what? When the dollar index is going lower, Bitcoin should be going higher. That's another thing you can keep in mind. All right. So that tells you what? It tells you there's a reason why Bitcoin should be going higher. Not just this price action, but also the dollar index is declining. But I will say, once we hit this level up here, if and when we hit this level, Bitcoin, it's a make or break level for Bitcoin, guys. I don't trade Bitcoin, but this is definitely a make or break level. If this thing's going to go to zero, it's going to do it after it hits this level. Okay. Calling it now. Yeah, Jerry. So why would you market a private? My thing is, why would you market a private group if you openly said at the end of this year you are off social media and you're done with Twitter? You just pretty much exposed yourself, saying you're here to get a quick buck, then you're going to leave after all the marketing. That's why these guys, they build this hype and this clout, and then they sell something, and then they disappear and run off in the hills. But I feel like a lot of people with me have been doing this consistently. Like, I'm not bragging about price action and signals, nothing like that at all, because signals haven't been the best here recently. But I will say I'm not taking a bunch of losses. It's just I'm not as active. Our directional bias has been 95% perfect. I am calling the directions perfect. It's just the execution and showing up to the sessions. But my thing is, I've been doing these groups for about 2 years now. These little groups. I ain't doing no 1,000 people group. If I had the opportunity to, I wouldn't. That's too much to manage, too much stress. These people don't realize once they start a group and they start calling the market in front of people privately, it makes your own trading get harder. And I failed the first 2 years when I did it because it's so stressful. Why add extra stress on top of something that's already stressful? You know what I mean? But these people, they come and go. They don't have the history of running a group and working with people. They just want to get this hype and all this clout, then show up, sell something, and do it for maybe a month, 2 months, 3 months, and then they disappear once they realize how hard it is. But my thing is, why promote something and then tell everyone that you're getting off social media in December? That's like ratting on yourself. Anyways, thank you, Em. I appreciate that, man. Hopefully, you guys like the session. And yes, Atif, I intend on having these like a live New York session where we get on here live during the session and calling the price. That was always my pure intentions. It's just I just haven't done it. But we're gonna get on top of that. I promise. We're gonna start doing it. But we can't do I won't be able to do it every single day because not every single day is a trading day. But when we're expecting something to pan out in the market, those are the type of days where we should get on live together and walk through it together for New York when we're expecting something to deliver a certain way. Yeah, you're gonna have that. If I can't answer everyone's question, but over time, the the questions will start getting answered over time. Yeah, Ali Khan, that's what I meant. That guy. Yes, Jerry. And yeah, Luca. I see it as well, but you can't hate on the grind. Anyways, I'm out of here, guys. Hopefully you enjoyed it. I will upload this recording for everyone that didn't make it, or if you want to watch it again, save it, whatever. All right. See, thanks for coming out, guys. Thank you. Thank you so much. I love the participation. That shit makes me want to actually do these. And that's another reason why I haven't done the live sessions, because when I did them, the few times I did them, only 5 people showed up. Our 5 people out of 100. I got a 100-person group, and 5 people show up to the live session. And it was a successful live New York session too. I remember I recorded it. Don't worry, guys. Or Lucas, you'll get in the group, but don't worry. Just send me a DM. And if you want me to really see the DM, send it to me on Telegram. Because then I got so many on Twitter where I don't know who's who. So anyways, I'm out of here, guys. Happy Father's Day.